Are you ready to unlock your financial future?
Joining us today are analysts like Danielle DiMartino Booth, known for her sharp insights on economic forecasts, and Frank Holmes, who predicts gold could soar to $6,000.
We've packed their extensive reviews into AI-powered summaries, allowing you to grasp the critical information quickly.
In this video, you'll learn about looming recession risks, cryptocurrency forecasts, and critical market sentiments.
So stay tuned as Danielle, Frank, and Peter Berezin reveal strategies to protect your investments. Today, we're diving into the insights of Danielle DiMartino Booth regarding the current economic forecasts and potential recession.
Danielle's work emphasizes the widening gap between soft and hard economic data, raising concerns over a possible recession.
Danielle DiMartino Booth observes that 65% of companies are failing to meet revenue expectations, signaling an economic slowdown.
She highlights this panic among companies as indicative of recessionary pressures, especially when hard data starts reflecting these trends. Danielle points out that 65% of companies missing revenue targets paints a grim picture for economic growth.
This margin compression comes from rising costs that companies are unable to pass on to consumers.
Danielle contends that the Federal Reserve is likely committing a significant error if they do not lower interest rates soon.
According to her, the Fed's hesitation could lead them to face harsher economic conditions than necessary.
Danielle warns that if immediate actions are not taken, the economy may worsen.
These trends are compounded by businesses announcing layoffs and a decline in consumer purchasing power.
Danielle's insights lead to key actions for monitoring the economy.
She emphasizes that investors should be vigilant about revenue patterns as indicators of economic health.
Additionally, a focus on the Fed's interest rate policies is crucial as they navigate these turbulent times.
Welcome to Kitco News. Today we're exploring the future of gold and the US dollar, and joining us is Frank Holmes, CEO of US Global Investors.
With the dollar under pressure and predictions of gold reaching remarkable heights, this is a crucial moment for investors.
Frank Holmes indicates that the dollar is likely to face a significant decline of up to 30%.
He highlights that as global monetary dynamics shift, gold could skyrocket to $6,000.
Frank Holmes explains that a reset in tariffs could directly impact the dollar's value.
He notes that increases in tariffs could lead to a corresponding decline in the dollar. Frank reflects on the recent surge in gold prices and the growing interest from investors.
Despite its peaks, he feels there's still a notable apathy towards gold among the general public.
Frank Holmes indicates that Bitcoin is likely to thrive as confidence in the dollar decreases.
He anticipates Bitcoin could exceed $100,000, driven by increased institutional adoption. Frank Holmes recommends that investors maintain a balanced portfolio, incorporating both gold and Bitcoin.
He highlights the importance of staying informed about geopolitical developments and their potential impacts on these assets.
Today, we're revisiting the market analysis following Alphabet's impressive earnings.
David highlights the significant impact of strong earnings on market sentiment and the implications for trading strategies.
David Lin notes that Alphabet's strong earnings have overshadowed recession fears.
This could suggest greater market stability moving forward.
David emphasizes the importance of patience during potentially volatile market opens.
He advises against rushing into trades near resistance points.
According to David, the S&P 500 faces critical resistance at 4,500.
The trends in NASDAQ could significantly impact trading sentiment.
David predicts that continued momentum from Alphabet's earnings might lead to further rallies in major indices.
However, he cautions that upcoming economic data could induce volatility.
In conclusion, David advises traders to remain vigilant and aware of market dynamics as we approach the weekend.
He reiterates the importance of strategic trading and solid risk management to navigate the current market conditions.
Welcome to the latest market analysis featuring David Lin, who will provide insights into the current market conditions and trader sentiment.
David highlights the notable effects of FOMO, or fear of missing out, and its role in market fluctuations.
David Lin explains that FOMO heightens market risks by driving traders to make hurried purchases.
He also notes that panic selling often occurs when traders anxiously anticipate market crashes. As David states, FOMO often compels traders to enter positions they may regret later.
He also emphasizes that these rushed decisions can neglect key market fundamentals. David suggests that while there are short-term trading opportunities, long-term trends point to potential chaos.
He advises traders to remain vigilant, distinguishing between short-term fluctuations and long-term stability.
David warns that significant corrections could be on the horizon for investors.
He stresses the necessity for a well-structured strategy to navigate the existing uncertainties.
What can we expect from the market moving forward, David?
David predicts that traders should be prepared for potential corrections in the range of 10 to 13% as volatility inches upward.
David stresses the importance of long-term investment strategies over hasty decisions.
He encourages traders to closely monitor market indicators to guide their trading actions.
Today, we're discussing the economic challenges highlighted by David Lin, particularly how Walmart is cutting prices to stimulate demand in a fragile consumer environment.
David emphasizes that this strategic price reduction by Walmart comes as other companies like Chipotle are struggling with falling same-store sales due to economic uncertainties.
David Lin points out that Walmart's recent struggles highlight significant issues within the retail sector.
He notes that as consumer confidence declines, retailers like Walmart are forced to drop prices to maintain sales volumes. According to David Lin, Walmart is doubling down on discounts to drum up demand, seeing it as essential to maintain their market share.
This strategy reflects a broader understanding of the fragile economy where consumers are sensitive to price changes. David Lin notes that Chipotle's latest earnings report reveals a concerning trend as they faced a decline in same-store sales.
This situation is indicative of broader market issues, where consumers are pulling back on spending due to economic pressures. The airline industry, as discussed by David, is facing a unique challenge. Many carriers have pulled their earnings forecasts due to rising economic uncertainty.
This echoes a critical theme in David's analysis. Controlling costs has become paramount as revenue growth becomes more elusive. David Lin predicts that without stabilization in the economy, consumer behavior will remain cautious, further hurting businesses.
He underscores that many companies will have to focus on cost control as they navigate this challenging economic landscape.
In conclusion, as David Lin highlights, businesses must strategically adapt to ongoing consumer behavior changes.
For consumers, understanding these changes can help in making informed decisions as economic conditions evolve.
In today's episode, we're exploring market dynamics with insights from Peter Berezin, the Chief Global Strategist at BCA Research, as he discusses recession risks and the evolving U.S.-China trade relations.
Peter highlights that with declining popularity, Trump faces increasing pressure from Republicans, which could impact his tariffs on China.
Peter Berezin suggests that political pressures on Trump are mounting, as many within the Republican Party have growing concerns over his leadership amid declining approval ratings.
He argues that this could significantly impact Trump's current tariff policies and trade negotiations with China. Peter points out that BCA Research has been forecasting a recession, and indicators such as initial jobless claims may provide early signs of economic strain.
He emphasizes that if jobless claims begin to rise, it could indicate serious challenges for the U.S. economy. Peter expresses skepticism about potential trade deals with China, stating that the Chinese government has little incentive to negotiate under current conditions.
His analysis indicates that China is observing the situation and may be waiting to see how U.S. politics unfolds.
Peter discusses how rising bond yields and inflation are complicating the economic landscape, potentially influencing fiscal decisions.
He asserts that these economic factors could lead investors to adopt more defensive strategies in their portfolio.
According to Peter, there's a continued bearish outlook for the stock market, as forecasts suggest significant volatility ahead.
He recommends that investors consider more defensive strategies, focusing on sectors less exposed to economic downturns.
In conclusion, Peter advises investors to remain vigilant suggesting that monitoring economic indicators is crucial for making informed investment decisions.
He also emphasizes the importance of focusing on defensive sectors like healthcare and consumer staples as risks in the market increase.
Wow, we really covered a lot of ground in today's discussion.
Indeed, from Peter Berezin's concerns about a recession to Danielle DiMartino Booth's belief we might already be in one, talk about divergence.
And let's not forget Frank Holmes' optimistic take on gold and Bitcoin as safe havens.
Absolutely. It's interesting to see the balance of perspectives. While there's consensus on economic challenges, the strategies to tackle them vary widely.
Right. David Lynn pointed out the struggles companies face maintaining sales, reflecting real pressure on consumer behavior.
That's a critical insight. It shows how interconnected these issues are and why investors need to strategize carefully.
If you found the insights from our experts valuable today, please give us a thumbs up and subscribe.
Exactly. Your support helps us deliver more expert analysis and deep dives into the ever-changing financial landscape.
And don't miss our next video, where we'll explore the shifting dynamics of global trade. You'll want to stay informed.